I've been saying, hey, you want to make money in the market, maybe just follow the president's portfolio or try to front run the White House.
Right.
Because to your point, these stocks are just jumping like crazy. I mean, Trilogy Metals, that's the biggest one. That went up 240% a day. Right, MP went up 200% in 2 months. Intel went up 90% in 2 months. LAC went up 200% in 2 weeks, I think. Trilogy up 200% in 2 days, or 1 day, 2 hours, more or less. These are some of the biggest gains I've ever seen in my stock market career. Fastest, and it's because of the president's portfolios.
Hello and welcome to Being Exponential with Luke Lango, where we'll be discussing the economy, markets, technology, and lifestyle, all from an exponential perspective. We are currently at a conference, and we took some time away just to, stay in touch. Luke, how you feeling?
I'm good. We got a lot to talk about. That's why we needed to do this, even though we're at the conference. Wanted to make some time to make sure that we got some thoughts out there because, whew.
It is a lot going on.
Right.
It is October 7th, and we're gonna dive right in. I want to start this conversation off, Luke, by talking about the potential AI bubble.
Right.
You know, different people, different places are saying it's happening. Sam Altman himself said it could be an industrial bubble in a way. Jeff Bezos has said the same thing. Mm-hmm. So certain things are happening. Last week you mentioned circular deals. OpenAI just cracked a deal with AMD, and that is another potential deal. You know, we buy the chips from you. You got to give us some equity. Mm-hmm. So where are we this week? How are we feeling this week regarding a bubble?
Yeah, I mean, I think you have to be 100% honest that a bubble is forming. Right. Now, just because a bubble is forming doesn't mean the bubble is going to pop, right? Bubbles get bigger and bigger and bigger and bigger and bigger, and then they pop. The existence of a bubble does not mean you run for the hills.
Right.
The existence of the bubble just means you have to be aware of the risks and observe them in the market. I was kind of telling my team this week, this market is stupid, but markets can remain stupid long enough to make fortunes. Right. Fortunes are made in stupid markets. Think about Mark Cuban, right? That guy I think he's a billionaire, at least a multi-hundred millionaire.
Yeah.
Right? Super wealthy, has had, a great life, and it was all because he made money when the market was stupid in the 90s. Right? He started an internet startup in the 90s and then sold it before the peak and made his fortunes during that mania. And he's been I think a billionaire for the past 25 years and enjoyed a life of luxury, and people think he's a genius and all that. So like that, my point being here is markets are stupid right now. Stupid markets can persist for a long time. And they certainly can persist long enough to make fortunes. And indeed, historically speaking, most fortunes are made in stupid markets.
Of course.
Right now, I think the market is definitely acting stupid. Mm-hmm. We're talking about the circular financing deals. Yeah, the OpenAI AMD deal is absolutely a circular financing deal. AMD sells chips to OpenAI. OpenAI gets AMD equity. That's money moving from one pocket, from the right pocket to the left pocket, back to the right pocket. Okay, so that's circular financing, very similar to the circular financing deal they struck with NVIDIA. Mm-hmm. And NVIDIA is also giving cash to OpenAI. So NVIDIA is giving money to OpenAI. They're going to take that money and then go buy AMD chips and then get AMD equity in return. And then NVIDIA is going to get OpenAI equity. So it's like, it's totally just money shifting between pockets, right? It's all circular. And then you got the report today from Oracle, right, or from The Information rather, who reported that Oracle is seeing very, very weak profitability in their AI compute business. That yes, they're booking $900 million in revenue per quarter, and they have these massive numbers for their AI rental business, GPU rental business, but the margins on that are like, I think 10% to 20%. Some deals are as low as 10, some are deals as high as 20. The average is about 16%. A cloud business typically runs, like classical cloud compute runs at 70% gross margins. So we're talking hit from 70% to 16%. That's a massive hit. Now, I don't think it's a deal breaker because profitability will come with scale. That's economies of scale. That's how this works. But it is another kind of like crack forming, if you will.
Yeah.
So there are warning signs out there, but we're not selling anything. We're not running for the hills. We're not telling people to get out because, again, bubbles are where fortunes are made. And I think this bubble has a runway. We are cutting rates into a technological boom at the same time GDP is positive. That is an ultra rare combination, a trio of huge potentially huge upside catalysts. And I think that leads to a melt up. Paul Tudor Jones, somebody I really admire, came out to CNBC this week and said, this feels like October 1999. And then he said, between October 1999 and March 2000, the entire NASDAQ doubled. Now, he said it didn't end well, so you got to have happy feet. But we have the ingredients for a melt up. And I agree with that. Now, I don't think we're October 99. I think we're late 98. So I think there's longer runway than 6 months. I think there's 12 to 18 months runway here. But regardless, it feels like we're 98, 99, meaning melt up and then melt down. But make money in that melt up. Fortunes can be made when markets are stupid. Fortunes can be made in bubbles. So stick with it.
100%. Yeah, it is. It's just such an interesting time right now because you got the poster boy for AI, OpenAI.
Yeah.
They had another funding round, and it's worth, as a private company, is worth almost $500 billion. It's unbelievable numbers.
Yeah, it's a $500 billion valuation for OpenAI. A few thoughts on that. One, I think it's completely wacky that they've gone from $0 to $500 billion with zero retail participation. Because they've been private the whole time. They're a venture-backed business. Sequoia Capital's in there. Microsoft's in there. So OpenAI is a classic example of the rich getting richer. Because it's an investment opportunity, private market venture capital, that is completely closed off to 99% of the public. Right. So I think that's ridiculous. Now, Robinhood is trying really hard to change that. Through tokenization, they're trying to democratize private investing, tokenize OpenAI equity so that people like you and me can go out and buy it. So it's not this closed off opportunity for 99% of investors. It's ridiculous that we're having companies go from $0 to $500 billion with zero retail participation. That's unacceptable. That's how you get a massive wealth divide, which we have a massive wealth divide. Right. If you want to further exacerbate that, then you continue to allow this private market investing to be closed off. If you want to try and close it, which I think everybody should have an interest in trying to close that for, the purposes of societal sustainability, you need to tokenize. And so I think that, that for me, that's a big win for tokenization. That's why we really like Solana in the crypto world, right? SOL, because I feel like they're a platform that's built for tokenization. Their speed. So I think there's a lot of opportunity with tokenization. Robinhood's a tip of the spear there. Coinbase could win, COIN. SoFi is getting into that game, SOFI. So these are fintech disruptors that I really, really like. The other thing about OpenAI getting to a $500 billion valuation is, it does speak to the confidence of Sam Altman and the confidence of his investors. They're making massive deals. NVIDIA, $100 billion. The AMD one, I think, is probably going to be worth up to $100 billion over time. Like, this guy is signing massive, massive deals. Yet they're burning cash like crazy. So either he's reckless or he kind of has a feeling that the White House has his back, right? Right. Because the White House is making moves these days. The White House, right? They invested, we talked about MP, then they took Intel, then they took Lithium Americas, LAC, now they're Trilogy Metals, I think TMQ is the ticker, or TQM, one of those two. Alaskan company, Critical Materials, CRML, there's no investment there, but there are rumors of an investment. So the president's portfolio, as I like to call it, is now up to 4. MP, Intel, LAC, and Trilogy. And then maybe 5 with Critical Materials. So you got 4, maybe 5 in the president's portfolio, and they're basically adding 1 a month. So they're going to keep adding. I think you're going to get 10 to 15. Anyways, against that backdrop, I wouldn't be surprised. Sam Altman's got really cozy with Trump recently. They're doing that Project Stargate together. Sam Altman's been in the Oval Office multiple times. They've announced big AI things together in the Oval Office. I think Trump and Sam have a kind of under the table agreement where it's like, yo, Sam, go out and do your thing. And if you get in a cash crunch, we got you.
You'll be all right.
Yeah, we got you.
Yeah.
So I feel like that only further exacerbates the momentum in the bubble, right? It makes the bubble bigger. Yeah. It's 1, a reason that the bubble will get bigger, but 2, also a reason that when the bubble pops, it may be a pretty disastrous pop. So that's my take on OpenAI getting to $500 billion valuation and their seemingly reckless behavior in the last few weeks. So aggressive. I like it. It's going to make a lot of money for investors potentially. But it is, it's got a hint of recklessness that, like, similar to the dot-com boom, echoes of the dot-com boom.
100%. Yeah, I do want to bring up a quote that I heard from Paul Graham specifically, who was a former mentor to Sam Altman. Yeah. He said, and I quote, if you parachute him into an island full of cannibals and come back 5 years later, he will be king. So that's the kind of man we're dealing
Sam
with.
Altman.
Yeah, Sam Altman specifically.
I think Sam Altman is the future leader of the free world.
Yeah.
Or maybe the not so free world, the AI world.
I guess we'll see. We'll
Sam
see.
Altman,
Yeah.
to me, everyone's on the Elon Musk train. Larry Ellison, obviously, with his recent wealth surge. But Sam Altman, to me, is he's the real king. He could be.
100%.
OpenAI has the best AI. He's making all these big deals. He's cozy with Trump. He's cozy with Jensen Huang at NVIDIA. He's getting cozy with AMD and Lisa Su, right? Like, this guy he's the epicenter.
Definitely.
And so if there were a betting platform to bet on people, I would bet on Sam Altman.
Right. Throw him on Polymarket, right?
Yeah. Throw him on Kalshi or Polymarket. I want to talk about those platforms in a second, but OpenAI, obviously private. Robinhood's tokenizing equity. SoFi's trying to get in there. Another interesting way to play OpenAI is through these publicly traded VC firms. One is Suro Capital. The ticker is SSSS, 4 S's. They're a publicly traded VC firm that owns a stake in OpenAI. We recommended that to our subscribers several months ago. It's done really well. And I think that's just right now, to me, that's the clearest pure play on OpenAI. So I'm really bullish on OpenAI and what they're doing. And Sam Altman. I said I would bet on Sam Altman. Well, if you want to bet on OpenAI, one route to do that is quadruple SSS, Suro Capital.
Gotcha. It's sort of like a spec of sorts. Where...
They're a publicly traded venture capital firm. So they are a VC firm that owns equity stakes in these private companies, but they're publicly traded. Their equity is publicly traded. So even though their private equity is not, their equity is public, and so it's a way to get into or get exposure to OpenAI. DXYZ, the Destiny Fund, they own SpaceX.
Yeah.
That's another publicly traded VC firm. So if you want to get into SpaceX or get exposure to SpaceX, DXYZ is the way to do it. I'm not as bullish on SpaceX as I am on OpenAI. So we've recommended Suro. We haven't recommended DXYZ, but we have recommended the quadruple S Suro as a play on OpenAI.
Gotcha. I do want to pivot back to the president's portfolio, as you called it last week.
Yeah.
So even critical metals, which did not get a deal signed or anything yet, just the postulation of a deal, and that stock rose 40-50%. I haven't.
No, the postulation of a deal, it's critical materials. CRML. The postulation of a deal sent it up 100%.
100%.
Yeah.
Wow.
And then once the deal was, I guess the White House said they're not going to do the deal, but the White House they say one thing, do a different thing sometimes.
Right.
All government officials do. Then it still was up. Even after that, it was still up 40 to 50%. So it's like, and then you look at some of the other names, USAR, NB, like these stocks are just going up like rocket ships because the market knows, or at least the market's sniffing out, they're not done. The White House is not done. The president's portfolio is just starting to be built out. We're at 4 now, like I said. We're going to get to 5, 6, 7. I think it's going to get to 10 to 15. Well-rounded portfolio. It's going to start with miners that they're going to go up the value chain. They're going to get foundries. They're going to get chip makers. They're going to get maybe memory. Micron could be a total takeover that, right? Not takeover, but investment target. So I think you're going to see them just eat the value chain. In the president's portfolio, I've been saying, hey, you want to make money in the market, maybe just follow the president's portfolio or try to front run the White House. Right. Because to your point, these stocks are just jumping like crazy. I mean, Trilogy Metals, that's the biggest one. That went up 240% in a day. Right, MP went up 200% in 2 months. Intel went up 90% in 2 months. LAC went up 200% in 2 weeks, I think. Trilogy up 200% in 2 days, or 1 day, 2 hours, more or less. These are some of the biggest gains I've ever seen in my stock market career. Fastest. And it's because of the president's portfolio. So one thing we're trying to dedicate research to is front run the White House. What's the White House's next pick? And like I said, it's the whole AI value chain, not just miners. I think they're going to move up the value chain pretty soon. So be aware of that.
Okay. We did mention Polymarket for a second, and I do want to bring it back to that. So with the BLS not reporting or wasn't able to report, we analysts have been trying to scrape together this convergence of information, and Polymarket seems to be coming up as something that is not necessarily a reliable source, but a source that is being tapped on. Yeah. So what do you make of that? I
am hugely bullish on prediction markets platforms. So Polymarket and Kalshi are the two big ones. Kalshi's the bigger one. I think market share numbers, Polymarket's like 20 to 30%, Kalshi's like 70 to 80%. I'm hugely bullish on them. I think you're going to get a lot of growth throughout that ecosystem over the next several years. The reason it came across my desk is we were actively recommending DraftKings stock and Flutter, the owner of FanDuel. And those stocks, they were on nice uptrends and just kind of boom, 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 boom. And then all of a sudden, out of nowhere, they just crashed. It's like, wait, why are they crashing? Well, it's because Kalshi launched NFL betting. And on the first Sunday they launched NFL betting, they took home over, I think, $500 million in betting volume, which was estimated to be about 8 to 10%, almost 10% of the entire market for US NFL sports betting volume on that Sunday. That's wild. One weekend and they're already at 10% share. So, I mean, you extrapolate that out, what, they're half the market by the end of the year? Yeah, I think Kalshi is going to eat the market. And I think Polymarket's also in this boat as well. So I think there's some massive opportunities, not just in sports betting, but because they're prediction markets. For those who don't know, they're prediction markets platforms regulated by the CFTC that's legal everywhere. So you can place a bet on anything you want, really, in any state in America. You can bet on what the Fed rate cut's going to be this month. You can bet on what the job report's going to be. You can bet on sports. You can bet on the most streamed Taylor Swift song on her new album by the end of the year on Spotify.
Yeah.
Like, there's so many different things that you can bet on. So I just think that's the future. I'm looking for ways to invest. Like, how do we play this disruption? Obviously, you know, Flutter and DraftKings, you know, they don't look so great with this new news. But how do we invest in the disruption itself? Kalshi's private. Who are they using? What's their supply chain? What's the technology? I'm new to this, so I'm digging in right. My team and I are digging in. Polymarket, that's more of a crypto-based one. What technology do they use, right? So we're digging in there. Because you can't invest directly in Kalshi or Polymarket right now. That doesn't mean you can't invest tangentially in them, either through the supply chain or the ecosystem or something. So that's what we're looking into. But I think this is huge. I think this is massive.
Yeah. Just every it's been FanDuel, DraftKings, yada yada, but now it's Polymarket this, Polymarket
well, here's the
that.
thing. Yeah. It speaks to the social reality we have, the socioeconomic reality we have, which is that people feel screwed. They're looking for a lottery ticket. And this to them might be their lottery ticket. Like, for example, the Cardinals-Titans game, Arizona Cardinals, Tennessee Titans. That happened on Sunday. Epic meltdown by the Cardinals.
Right.
Epic meltdown. But the reason I bring it up is, so the way Kalshi works is you can bet on real-time odds. Now, throughout the game, the odds change. And the odds for that game in sometime in the third quarter, fourth quarter, when the Cardinals were up 21-6 and Tennessee wasn't moving the ball at all, it was 98% to 2%. 98% chance Arizona's going to win, 2% chance Tennessee's going to win. If you had placed $1,000 on that 2%, then Tennessee ended up winning the game, okay? So that 2% resolves in 100%. You would have turned $1,000 into $50,000 in about an hour, about 30 minutes. That's the lottery ticket that people are looking for, and that's why they are drawn to Kalshi. They feel broken by the system. They're not looking for Coca-Cola to give them a 3% dividend. That's not going to go anywhere against 3% inflation. What they're looking for is a way to get rich.
Yeah.
I don't think that says good things about society. I don't think that says good things about our economic reality, but it is our economic reality. It is the society we live in. And that's why platforms like this are taking off. People want that golden ticket to millionaire status, to multimillionaire status. And they think that if they do enough, right bets on Kalshi, that they'll be rewarded, right? And the thing about it that's cool is now it's like everybody thinks they have an edge somewhere, right? Sports people think that they're smarter than other sports people. Somebody really knows music. Maybe I can guess that they're huge Taylor Swift fans. I can guess that. Right? Like, everybody feels like they have an edge, at least in some corner of the market. And so it draws it's a cast a really wide net. So anyways, I think these platforms are going to grow like crazy. I think there's opportunity to invest in the disruption they're going to bring. And we're digging into that, absolutely.
Definitely. It's a lot sexier than sitting your money in an index fund and waiting 30 years. That's for sure.
Yeah, we all know that sports betting's always been sexier than investing. And when you can now take that idea and apply it to so many different events.
Yeah.
It's fun, and again, in this reality that we live in, it's something that people will gravitate towards.
100%. Okay, I do want to pivot to one more thing. Another stock story, a company we talked about before. I believe CoreWeave just struck a deal
Yeah.
recently. That's the company we talked. I think you called them either the Ferrari,
Nebius is the
Nebius is the
Ferrari,
Ferrari,
CoreWeave's like the
the Lamborghini.
Lamborghini.
Right, right,
Yeah.
right.
I absolutely love these stocks. I mean, they're the neo clouds that are up and coming. Here's the big thing again is that these AI hyperscalers are spending all this money to build new data centers, but demand still outstrips supply. So they need to find supply, build supply, attain supply, whatever. And so they're writing these massive checks to these companies that have supply.
Yeah.
CoreWeave has supply, has GPUs. Nebius has supply, has GPUs. So these stocks have been winners. They're down a little bit today on the Oracle news. Okay, buy the dip.
Right.
AI stocks are in buy the dip mode. Buy all dips in those stocks for the next probably 6 to 12 months for sure. Like these are stocks that will continue to run. So I love Nebius. I love CoreWeave. There's a few others out there that are kind of in that space, but CoreWeave and Nebius are like the two. Again, Ferrari and Lamborghini. Those are going to outpace Oracle, outpace NVIDIA, outpace all those stocks because they're smaller and they have a lot more growth torque in them.
Gotcha.
Yeah.
Okay. And then I know you don't have access to your Bloomberg terminal right now, but do you have maybe 3 to 5 breakouts that you've seen over the past week?
So eVTOLs are breaking out. Joby Aviation did 3 test flights with their eVTOL at the California Air Show in Salinas, California. They went off that hitch. That stock is back up to $20. Feel like it wants to break through 20 and kind of make new highs. Commercial operations will start in 2026. I think that's going to be big. Archer is also making a big move back to highs as well. So the eVTOL stocks are for sure heating up. The quantum stocks are heating up too. IonQ, Rigetti, they're all kind of blasting to new highs. We're in the era of commercial quantum. I think that's going to continue. Any weakness there should be bought. Oklo, we've talked about them. That one had a dip. We said buy the dip. Now it's zooming right back. I think it's at 130, 135 now. That stock's been really hot. I think that's going to continue as well. And then Circle has been in a pretty big breakout recently. Stablecoin legislation that is being pushed forward right now. Government is shut down, so there are some delays to that, possibly delays depending on when the government shutdown resolves. But I do think that there's a lot of growth potential in stablecoins and a lot of growth potential in Circle as kind of like the servicer of stablecoins, the servicer play. So those are some stocks that have just been on my radar that I like quite a bit. Super Micro SMCI has been heating up.
Yeah,
I think that's on a comeback. I think that's a good buy on this comeback. So yeah, those are a few stocks that I've been kind of watching that have kind of had some meaningful breakouts recently. And then all the mining stocks, these material stocks. The American Battery, ABAT. That's a one we recommend in our breakout trader portfolio. EOSE, big move there. Obviously the LACs, USAR, we talked about USA Rare Earth, they're like MP, but a mini MP. That one's been massively hot. So you're seeing a lot of growth in these industrial metals miners. And I think that will continue because, again, the president's portfolio is going to keep on growing. So traders are trying to front run the White House. So, yeah.
definitely. And I just want to close with one more thing. Not quite a stock story, but gold just hit $4,000. And in parallel with the highs of the market right now, I know you had some ideas regarding that, essentially the bifurcation of the market we've been talking about.
Yeah, so I think what you're seeing there is a dollar debasement trade. So fun fact, and not so fun fact, gold and stock are all-time highs. If you look throughout history, then that's very rare. That almost never happens because gold's a risk-off asset. It normally goes up when stocks go down. Historically speaking, in the few times that gold and stocks did hit all-time highs at the same time, it didn't end well normally. Once was right before the runaway stagflation of the 1970s. Gold and stocks hit all-time highs, I think, like 1972, 73, right before inflation went from like 2% to, 12% or whatever it was. Gold and stocks hit all-time highs right before the Volcker Fed took a hammer to the economy and hiked rates like crazy in 1980-81, and that led to the early 80s recession and a big stock market crash. Gold and stocks at all-time highs together right on the eve of the great financial crisis in late 2007. So like the precedents for gold and stock hitting all-time highs, they're not bullish. Historically, they're actually very bearish. So that's not great. And then number two, what I think is really going on fundamentally is a dollar debasement trade. So the value of the dollar is decreasing. When the value of the dollar decreases, the value of assets priced in dollars goes up because asset over dollars. Dollars is the denominator there, right? It's priced in dollars. So if the value of the dollar goes down, then asset value goes up, right? It's simple math. So the dollar's been crashing. It's off to its worst start to a year since I think 1973. That is forcing gold higher because it's priced in dollars. That is forcing stocks higher because they're priced in dollars. That's forcing commodity prices higher because it's priced in dollars. So you're seeing a dollar debasement trade, which is causing a flood of capital into assets to escape that dollar devaluation. Unfortunately, consumers can't escape that dollar devaluation. So for them, prices at the grocery store go up. Prices at your local mall go up, right? So because they're priced in dollars. So that those prices go up too. So this is just an example of a labor class to capital class wealth shift that's going on. That the capital class is able to escape dollar debasement and actually benefit from it by investing in assets because those asset values go up. The labor class that doesn't have money to invest in assets, doesn't own assets, just gets screwed over by higher prices of these assets because they're paying for them, they're consuming those assets. So it's just that K-shaped economy, that wealth divide we're talking about. The rubber band's getting stretched real wide. AI is going to stretch it even farther. At some point it breaks, and I don't know what happens after it breaks. But I do know that for the next 12 to 18 months, you got this AI boom, you got the rate cuts, you got dollar debasement. All these things mean asset prices go up. So if you want to participate, you have to own assets. Even if it's owning $5 of this stock or $10 of that stock, whatever it may be, $100 of crypto, $100, whatever it may be, gold, crypto, tech stocks. That's where you want to be now and for the next 12 to 18 months as long as this bull rally continues. So that's my thought there. But again, the rubber band is stretching really far.
For sure. Yeah.
At some point, comes back. At some point, physics becomes physics, and it snaps back.
Or it breaks.
Or it breaks.
No, you know,
God forbid it breaks.
Yeah, God forbid it breaks.
God forbid it breaks.
But the distillation there is build your moat, get assets, even via Robinhood, whatever. There are ways for the regular investor.
Yeah, well, yeah, it's just you don't know what's going to happen. Yeah. You know that it's either going to break or come back or whatever, but it's not going to stay the same. So while it does stay the same, take advantage of the conditions. And the conditions right now are dollar down, gold up, crypto's up, tech stocks up. So roll into that. Make as much money as you can while the boom's alive. Again, stock markets can stay stupid long enough for you to make fortunes. While it's being stupid, go make your fortunes.
100%. Okay.
My 2 cents.
I think we'll wrap it up there, Luke, unless there's anything you wanted to mention.
No, I know we got to get back to this conference, so I just wanted to take a quick break here, get these thoughts out there, because like I said, it's important right now.
Yeah.
There's a lot going on in the market. It's important to stay updated. So yeah, thank you for taking the time too.
100%. Yeah, we just want to make sure we stay in touch with all of the subscribers out there. And of course, just another reminder, make sure to comment, leave a like, whatever it may be. You want to make this a conversation. There is a chance we don't have an episode next week. I think little birdie told me on a vacation.
We'll figure it out. We may do an episode. We may not do an episode. Yeah. We'll figure it out.
Okay. But either way, that's been another episode of Being Exponential. Thanks for watching. We'll see you next time.